You talk firstly, I think, about yesterday's GDP number.
Morning, David. Yes, yesterday's highly anticipated GDP number ultimately came out in line with market consensus, but we were a bit disappointed. There's a much sharper slowdown in the trade and finance sectors than certainly we'd anticipated, although the much anticipated rebound in the mining sector occurred pretty much in line with our estimates. What was of great concern, of course, is once you strip mining out of the numbers, you end up with growth of just 1.7%, which I think is fairly disappointing by any standards. And when you consider that the ongoing turmoil in the mining sector suggests that third quarter mining production won't be impressive at all, certainly the outlook for GDP growth remains quite worrisome. So certainly nothing to cheer in yesterday's numbers as far as we're concerned.
Yeah, and as we were saying earlier, if you average out the numbers, they sometimes don't mean very much, and what you've just highlighted there is the importance of mining. But of course, mining can be very volatile in its contribution to GDP. Then we've got PPI, the Producer Price Index, coming out later in the week.
Yeah, absolutely. I mean, the week remains quite chock-a-block as far as data is concerned. We're expecting a further moderation in PPI. We've penciled in a rate of 4.9%. Again, this is likely to be the low in the cycle, as similarly seen in the CPI print that we saw last week. And from this point, we're expecting inflation is likely to tick up slightly as we head into the remaining months of the year. So as far as interest rates and interest rate expectations are concerned, even with yesterday's weak GDP print, we're not anticipating any further move in interest rates, so our base case scenario remains that rates will remain on hold for this year.
All right, well, the currencies internationally, obviously we're keeping an eye on. The rand is at 8.42 again, weakened again this morning from where it was. The international side, everyone's looking at Jackson Hole and Ben Bernanke's comments expected there. What are your expectations of that, and what about the implications on for the currencies?
Well, still some lethargy that we're seeing as far as international currencies or the major currency pairs internationally. And as you alluded to, I think it is because everybody's waiting on Jackson Hole, expecting Mr. Bernanke to in some way allude to the imminent conduction of QE3. In our view, we don't think that this is likely to happen. In fact, it appears that his speech is entitled something along the lines of monetary policy since the crisis, which would tend to imply that it's going to be more backward-looking than perhaps the market would like. So certainly we're not expecting him to make any great pronouncements as far as QE3 is concerned this Friday. Having said that, there's still going to be the ECB meeting in early September, and then mid-September we do get the FOMC meeting. So I do think that these events are going to be quite important as far as international currency markets are concerned, and I think probably until we get to that FOMC meeting mid-September, the lethargy that we've seen on international currency markets is probably likely to continue.